Hello. Morning, everybody. Guess what? They updated the mic software. Morning, Vader, Virginia, JC, Evil, Danny, Jux, Amy, Church. $2 Temu undies. Really? Morning, Callum, Paul, Sarah, Steve. That was awkward. It's that many times, Callum. Morning, Trekion. How we doing? So that was an eventful morning, wasn't it? So New Zealand dollar had a bit of news. Pound had a bit of news. New Zealand dollar pound. Complete V-shaped recovery. Interesting move. So New Zealand, obviously, their interest rates came out this morning. Smashingly massive move on the New Zealand dollar. And then the pound missed inflation target. So, yeah, complete V-shaped recovery there. We've got a lot of ADRs, as you can see. New Zealand dollar main mover this morning. All New Zealand pairs, ADRs, massive ADR movement. As last time, this news is as expected. This New Zealand dollar, every time this rate comes out as expected, the last 3 releases we've had, this thing has gone mad, absolutely crazy, and continued in that crazy move for a while. So we'll see what happens with it. But it's just a massive, massive, massive overreaction again to this New Zealand dollar. It's the 3rd time in a row it's happened. Every single New Zealand dollar pair. Massive, massive spike. Absolutely no reason for it because they haven't changed the interest rates. They're just using it to dump orders into the market because it's low liquidity. Asian session, they get to dump tons of orders into the market at once. They eat all the liquidity up with all the orders sitting there, and then it comes back to origin. Anyway, that's just what they do. Just unfortunate because it's cost me multiple drawdown controls this morning, about 2.5%. But anyway. So, Davey. Morning, Ross Weether. It's time, monkey. So we'll recap all the news this morning and see how it's all going. Indices have broken short. I wasn't going to trade the FTSE this morning. I'm in it. Never mind. Obviously, the FTSE's had a very large reaction, obviously, this morning to that pound news. So I wasn't expecting a lot of liquidity on the FTSE this morning. We'll see where that goes. But I suspect that will probably hedge. Anyway, so the interest rates this morning came out at 5.5 as expected. We'll have a look at the monetary policy statement and the press conference in a second. The CPI for the pound came out at 2.3. So we had 3.2. We forecast 2.1. We missed. We got a 2.3, which means it's bounced higher than forecast, which means we put our interest rates back, which makes the pound bullish. So we've had a strong positive move on the pound this morning. We'll wait and see what the markets actually think of that as to whether or not it's going to change monetary policy. We'll have a look at what Bailey said yesterday as well in a minute. But obviously today, all of this volatility is coming ahead of FOMC this evening. So FOMC this evening is just a statement. It's not a press conference. So this one is quite often a dead duck because we just get told what we know. CPI is going up. We can't put interest rates up at the moment, guys. We're going to have to push it back. It's all going to be data driven. When inflation comes down below the 3% target towards the 2% target, we will then start to drop rates at some point this year, possibly, if not early next year. But it depends what happens with CPI, blah, 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 usual stuff. So because we haven't got a press conference to actually poke the Fed, unless there's anything in there that is different to what the markets are expecting, we'll probably get volatility, a spike. Usually it's less than an ADR, and then we just don't do anything from it. But we never know, so you have to wait and see what happens. We've got Orr speaking later. He spoke this morning. Or is a he, isn't it? Was it a she? Or is it the Prime Minister that's a woman? I can never remember in New Zealand, but Orr, whoever they are, spoke this morning. So we had the press conference there. So very unlikely anything's going to be said there that we didn't hear here. So that's not going to do anything. And then we've got retail sales, which won't do a lot. So that's this morning's news. Obviously, there's been masses of volatility coming through. Looking at last night, Lagarde came out as Bailey was starting to speak and said there's a strong likelihood of a June ECB cut if the price path holds. It's less than 2 weeks before that happens. There's no data really between now and then that can really scupper this. So she's basically saying, looks like we're cutting the rates, which is fine. We knew that. Waller, if data warrants, we consider a cut at the end of this year. At the moment, the data is not warranting it. So he's saying basically get ready for maybe November, possibly December, but more likely next year. So again, bullish US. Bailey, I expect quite a drop in April inflation data. Unlucky, you didn't get it. Well, April, it's the month on month he's talking about there, but the year on year certainly didn't hit target, did it? Other than that, there's nothing else Bailey said last night. So they are expecting the Bank of England to get a good drop in inflation. The fact that we've just had a bounce on the annual may not achieve that figure. So we will see what happens on that one. But overnight news, nothing much else. I didn't scan Japan. Hang on, let me just see if there's anything from the yen. Japan's top currency diplomat sees the Nikkei. So that basically is saying somebody in Japan looked at a chart. Thanks for that. Exports, trade balance, machinery. I'm just looking for anything to do with the FX movement. Nothing there. Nothing there this morning. Right, so that brings us on to the New Zealand. So rate came out at 5.5, massive spike in the New Zealand dollar. They expect 3% year-on-year inflation in Q3. So they are expecting to hit the 3% target. They are at 4% now. So what they're basically saying is we expect to be at 3% within the next quarter. Big drop. Same as the pound. Yeah, when inflation starts to drop, it's like a stalling aircraft. It goes up like that and then it comes down really quick. So they're forecasting a 1% drop in the next quarter, basically, which could potentially happen. Cash rate of 5.54 compared to 5.33 in Q2 2025. So they're saying that it's very unlikely that we will be changing interest rates anytime soon. So a little bit like the US, it's nowhere near where they want it to be at 4%. If you look at the entire world at the moment, New Zealand has the highest inflation worldwide out of the developed nations at the moment. It's not that far behind Australia, not that far behind the US, not that far behind the pound. Yeah, we're all, well, pound's different now, but obviously it's lagging. So there's absolutely no chance of interest rate drops, which is why there we go, pound's updated now, 2.3, not 3.3, 3.2 rather. So yeah, basically that news this morning of interest rates not changing was not a shock to the market. The market still should be fairly bullish on the New Zealand dollar, and it will get a little bit more bullish as everybody else starts to reduce their interest rates as well. So New Zealand dollar longs against everything really for the foreseeable, but there's no reason for that massive spike. Apart from that, nothing else came out from that press conference that was of any interest. CPI month on month came out at 0.3 on a forecast of 0.1. So we bounced. Yeah. Annual, we're expecting 2.1. We got 2.3. We bounced. So 3.9 on the core. The core is the one that is the most impactive inflation data. That was a 3.9 on a forecast of 3.6. So the fact that we were at a 4.2, forecasting to come down to 3.6, we landed kind of bang in the middle of that, is not good. So it does mean that there's less chance of interest rate drops sooner. So I suspect now, we'll see if there's any indication as to what they are expecting now, the markets. Right, so traders no longer fully price in 2 Bank of England rate cuts this year. So again, going back to what we were looking at and what we were talking about yesterday, I said there were economists saying that the Bank of England are going to drop their rates by 1% this year, which I said, if they're going to start this in August, that means they're coming down at 0.25% month on month on month until the end of the year to achieve that target. Market is now saying we shouldn't get more than 2 rate cuts this year, and they won't be more than 2.25s. So it also means that it's certainly not happening in June. We know that, but probably towards the end of the year. So again, bullish. So that euro pound, if you're in it, euro is about to start to drop. The pound has just had news that it's probably not going to be dropping. It's more neutral to rally. Therefore, euro pound, really want to be short only on it. So that's basically that. 38 basis points of cuts in 2024. That number is always, it's never right. It's always a fraction kind of equation that they use to get to it, but it means somewhere between 1/4 to 0.5%, which is 1 to 2 rate cuts before the end of this year, but back-ended. So that's the news this morning. Obviously, you can see the impact it's had on the markets. You need to give it time to calm down. Aussie, New Zealand, we got 225 ADR, so that's completely filled the ADR dash. Obviously, it's come back from there as a pullback, but quite often we see that continuation movement. So if you look at the last times, Aussie, New Zealand's a good one to look at. Let's look at the hourlies. So these are the rate changes, yeah. So that's the last time we had this. So we've had that, yeah, which is equivalent to that. That's what came after. Yeah. So there's a high probability of a continuation. That was another one. Push, test of propulsion, add. Yeah. So when these big propulsion gaps go in, these are this is not a fundamental shift, but they are based on fundamentals. If they get added to, they tend to hold and you don't come back to them for a long time. Yeah. A la that. Yeah. News event, retest. News event, retest. News event. We're in the retest. So good looking short opportunities on all of these at the moment. Wait for 5-minute reversal alerts short. You haven't even had a reversal alert long yet, so you're not going to get one short. You're not going to get back up there. So you kind of got to just play bearish price action if you want to play the continuation of these. But these are very, very unreliable, all of these news events at the moment, because these are knee-jerk reactions. And the market basically should be bullish for New Zealand dollar. But also Aussie is very bullish at the moment. So, these are difficult pairs to trade at the moment because there's a bias of long on both of them, because the New Zealanders and the Aussies are both very high with their inflation. It's not coming down anywhere near as fast as they want, but there is an interest rate differential for the Australian and the New Zealand. So in theory, that Aussie is weaker from an interest rate differential perspective. So it's a short Aussie, New Zealand. So those are all your ADRs today. Aussie, New Zealand. We've got the Euro, New Zealand, obviously, which has spiked down dramatically. That is retracing back into there now. Again, Euro, we're expecting to be bearish. Now we've got a strong move on that New Zealand dollar. That's a great looking short opportunity as well. Pound odd, pound CAD, and pound Swiss are all moved off the back of the pound news. So in the next 45 minutes, you're going to get, at the moment, the propulsion gap is going to look like that. So again, wrong direction on that pound CAD at the moment. Pound odd, obviously, big spike up on that one. Pound Swiss, big spike up on that one as well. So big, strong move on this pound. But we'll wait and see what the market makes of this. Although it is a 2.1 forecast achieving a 2.3, don't forget the previous was over 3%. So it's still a very good drop. Yeah, so it is a good drop. It's just not quite as much as we were expecting. Some of the analysts were expecting a 2%. 2% is target. So when you actually look at it, we are only 0.3% away from target now, which does mean there's a good chance interest rates are going to come down. It just means that it's probably going to be put back a month or two. So all of these are very difficult to know whether or not the market is actually going to completely recover this and go, actually, looking at it long term, probably isn't, or whether it is going to be we need to put another couple of months into this. So they will be factoring in what they want to do long term now. Pound New Zealand, obviously, V-shaped recovery. We had a massive hit down to 175, straight into the weekly lows, back up there. But that's basically the news. So you had a big, strong New Zealand news and a big, strong pound news. Both cancel each other out. So nothing much you can do with that one today. That one could go either way, obviously. New Zealand CAD. So all of these big moves on the New Zealand are potentially going to hold these propulsion gaps and go. So gap and go type plays. But we will see what happens. We'll have to give it the day to play out. Some of them are already kind of filling the gaps this morning. So those are your ADRs, RSIs. Obviously, at the moment, there's not a lot there. Give it another hour. You're going to have loads of RSI extensions, I suspect, lining up as well. So if they continue the moves, obviously, we're going to start to get some RSI extensions. So you will get pullbacks on these moves if they do happen. But, they could all turn into A-shaped recoveries. It's very, very difficult at the moment to anticipate because the market really is not getting any information about interest rates. We've been sitting here for well over a year now with nobody changing interest rates apart from the Swiss. Get the yen because that's a different scenario. But we still haven't had anybody drop yet. Forecasted drops. So the euro is going to be the first one. So there's still no indication of when the New Zealand dollar from that news is going to change its interest rates. We don't know what's happening with the US. The pound now is in question. Aussie haven't mentioned anything. So we're in the same situation. So this market now needs to digest this information. They'll rescorecard it and they will either then go, we're going to now take this for a couple of months, or we won't. So we'll wait and see. So there you go. So that's the news. So you've got a couple of RSIs. The only big RSI extension you've got at the moment is the 4 hour on the pound Swiss. That's been extended and embedded all week since actually kind of middle of last week. We got extended. It's not stopping. And obviously that news event has not helped. So good looking short on that. We are very extended now away from that 24. We're 4 ADR away from the 24 moving average. So in this, when you get this far away from the MA, the market struggles to hold it because you just run out of people wanting to go the other direction. There's just nobody left to sell to you. Therefore, you have to undo it, unwind it. So when you get very big extensions away from that 24 RSI, you tend to get quite a fast ping back. Doesn't mean it's not going to continue in that direction, but the market will exhaust itself. So good opportunities for mean reversions on some of these. The other thing is obviously what it can do is just flag, wait for that moving average to catch up, and then flag break. So those are the two scenarios with the extensions this far. Which one will play out? We have to wait and see. So this morning I'm going to go through all the pairs basically. We'll just have a look at everything, where everything's positioned. Try and undo or try and unravel what's going on with directional biases. The problem at the moment, obviously, is we've got FOMC this evening, which could completely reverse everything that's happened this morning, because if they come out and say, guess what, guys, we look like we can get 2 rate cuts in this year or something, that US dollar is going to go through the roof. They're going to pull money out of everything to pile it into the US, or rather dump the US. Depends what they say, obviously. But there's a chance that we could see a load of money coming out and driving into the US this evening. So kind of have to take everything with a pinch of salt at the moment, because obviously there's been a lot of movement. Tomorrow, we've got all of the PMIs coming out as well. So these are the kind of inflation figures for manufacturing, which will have also an impact on CPI moving forward. So these are a good indication as to what we would expect CPI to become. So when these go up, CPI goes up. When these go down, CPI goes down. And obviously that all drives inflation, interest rates rather, which drives the markets. So loads and loads and loads of news coming tomorrow as well, which could all impact this. But we'll see where everything is. Have a look at it all and see if there's any good opportunities. Morning, everybody else. XRupdate.news, Nav, Neo, Bumo, Jeremy, Ismet, Kennelly, Vitali. Aussie US supposed to be bullish. Don't know. There's no bias on it. The US dollar is neutral to bullish. The Australian dollar is neutral to bullish. So that's why you're getting a lot of this. No bias on it. So difficult to tell, really. How's it going on with the new PTEA strat? What's that? I don't know what that is, Mumo. I haven't got a new strat. You mean RSI 2? I don't know yet. I haven't decided what I'm going to do with it yet, to be honest. If that's what you're referring to. Right, so we'll have a look at all the pairs where everything's going, and RSI 2. Yeah, I don't know yet. I'm still deciding what to do with data. I don't know. There's a million different variations of it to choose from, and I still haven't decided. Last couple of days, I've been sidetracked and looking at something else, so I haven't had a chance to really push it any further. But don't know. It's there's a million ways to use that strategy to make money, and I haven't quite decided how I want to use it. I need a diversification strategy, which is different to position trading. So I'm trying to figure out what's the best way for me personally to use it. If you want to use it though, pick an RSI 2 extension, get in, pick an ADR stop, and pick an ADR target. They all work. Just pick one. Trade it on the 4-hour or the daily time frame. Get in 0.1 ADR apart, 0.5 ADR apart, whatever you want. It all works. It all works. So, but what you've got to do is make sure that you're not replicating trades that you would take on other strategies. That's the whole point of diversification. That's why I'm looking at that as a diversification strategy, because it's constantly in and out all the time. Intraday, a lot of it. And I keep looking at it and thinking, should I get out in the day? Should I leave it? Sometimes it's better to do that. Sometimes it's not. They all, as I say, it all works. So the set file that I posted worked really well. If you put any variations on that set file that I posted, they all work really well. It's long term, obviously. It's going to have dips. But it's more a case of you deciding how much drawdown you're willing to take at the end of the day, because it all works. It's just some of it is big drawdown, some of it has small drawdown. Some of it has big rewards, some of it has small rewards. This is my dilemma. I've got 300,000 variations of the strategy which all work. Which one do you pick? Oh, anyway. I will update when I've decided on it. I'm really struggling to decide at the moment. So I've got another strategy that I'm working on at the moment as well, which has kind of taken up a bit of time over the last few days because it's quite complex. But I'll update you on that at a later stage anyway, at some point, assuming it works, which it may or may not do. I don't know. Right, so let's start off with the Aussies. Aussie CAD. So we usually get quite a big reaction on the Australian dollar to New Zealand dollar news and vice versa. So far today, the Aussie hasn't batted an eyelid to that New Zealand news, apart from obviously Aussie New Zealand. Really not interested at all. So what tends to happen is whatever happens to one happens to the other. So there's a chance that we might find a little bit of a bearish Aussie this morning or throughout the London session, but so far it's not really doing a lot. So as you can see, there was a trade there which I took and got out of. There was a trade there which I broke even on. But apart from that, not really a lot on this at the moment, the Aussie CAD, because it's literally just news event, nothing, news event, nothing. So we're waiting for some news. We haven't got any really coming up at the moment on the Aussie and the CAD. So no real advantage either way. The current, it's slightly more bearish at the moment, but you can trade this literally in any direction. So, you know, doesn't really matter where you get in. It's got really nice structure up and down and up and down at the moment. So just waiting for some opportunities on that. Aussie Swiss, the Swiss franc is still very bearish. It will become probably a little bit more bearish as the euro starts to drop, assuming the euro does start to drop, obviously. We keep talking about rate drops until they actually do one. We haven't had one, have we? So we'll have to wait and see. But potential for this to carry on. But equally, you know, there's opportunities for both directions. At the moment, I'm just steering clear of the Swiss myself, just because I don't know which way the Swiss National Bank is going to go with interest rates. They dropped just like that without telling anybody. They may well do it again. If you look at the fundamentals for the Swiss, they are very low on inflation, which is why they dropped those interest rates down. But the inflation change basically is starting to tick up again. So it's quite possible that they will just maintain that until everybody else catches up with them, because they don't want to go too far. Otherwise, they become less attractive to put money into. So it's difficult to tell what's happening with the Swiss. If they drop interest rates again, this thing could just go into a parabolic move that doesn't stop for a while. So it's quite dangerous to trade because it's got a possibility that it could go mad. And obviously with what's going on in the Middle East and everything, we could have a massive spike on it as well. So it's just too volatile at the moment for me. I really don't know which way it's going or it's likely to go. So I'm steering clear of them all, but it's always the way. When you're not trading something, it trades beautifully and you can't go wrong. And as soon as you get into it, something happens. So, you know, this thing at the moment, we've had a lovely reversal. It's retesting at the moment. Looks like it's going to come down, but it's bullish. So I'd much rather be longing everything against the Swiss than shorting it. That would be the best bias. But as you can see, you haven't had an opportunity to go long on it. You've only had opportunities to short, and they've been very few and far between. So again, not a lot of movement, ignoring that safe haven run. You've had short opportunities there, long opportunities from there. So everything plays out on it, but very difficult at the moment to decide which way it's going. I'll cover all the ends at once like I usually do because nothing's changed this week so far. So I covered everything on Monday. We're now on Wednesday. So go and watch Monday's video. Basically, nothing's changed. Yeah, we have absolutely no clue. It's flatline. The yen is dead in the water. Nothing seems to be moving against it unless there's a fundamental, obviously. Now that gap is done. Yeah, we're almost up at the all-time highs. New Zealand dollar has broken all-time highs on the yen, and the US dollar yen is just stuck sideways. Yeah, so we looked like we were continuing market structure. That's failed. We're back up here. So it looks like we're going into the range. Typically, we do stay in a range for 2 to 3 weeks after an intervention. So is this now waiting just for that drop? It's going to need something to start it. US dollar is going to need some bad news, I think. But all these yens, again, I'm not interested in the yen at the moment. It's just impossible to predict any direction on it. You should be long in it from swaps. However, you should be shorting it from intervention. So it's just impossible to predict a direction. You might as well flip a coin on it. If you're going to flip a coin, hope it comes up heads because at least you get positive swaps. Other than that, it's impossible to trade. It's just sideways. You could try range trading it, but it's just not got enough movement. Yeah, there's not enough movement intraday to make any money on it at the moment. Until that volatility picks up, it's just dead in the water, isn't it? Aussie New Zealand, so massive reaction to the downside. This thing's been squeezing and squeezing and squeezing for ages. When I get out, the move that I was forecasting, which was the return to here, plays out. Typical. I still think it's got further downside on it, especially now with that New Zealand dollar interest rate change causing this move. So shorts, basically. But we are at range lows, this propulsion gap, which they have bought up multiple times. So if the market wants to hold Aussie New Zealand now, this is where it's going to hold it from. So if you get into this, the best trade I think at the moment on Aussie New Zealand is to wait for some kind of reversal short, which you're going to find it very difficult to get a reversal alert on, because obviously the news event means you're not going to get one painted, because it's not going to be able to break back above the high unless it does a V-shaped recovery. But any kind of move to the downside that starts when you get back down to this low, go out further. There we go. So when you get back down to this low again, which is where we ended today's move, just protect the position, because one or two things is going to happen. It's either going to go into a range from here, they're going to rebuy this level out, this propulsion gap, or it's going to break that propulsion gap and the buyers are going to flip short and drive it back down into this one. So it's either going to do that or it's going to do that. So a really good play on this would be to try and get a short position started in here. And then when you get down to this level, just protect it. You've either then got a really nice runner on your hands or it's stuck. So difficult play though, really, Aussie New Zealand. They are both bullish, and a bull against a bull equals a range. So the Aussie is the one that tends to win out most of the time because it's a bigger economy, bigger country, just bigger. So in these sort of situations, you tend to get it slightly more bullish than bearish. But we've got big old propulsion gap targets to the downside. And if you look at it over a longer period of time, we are at range highs. Yeah. So that's the interest rates not changing on the New Zealand dollar. That's the interest rates not changing on the New Zealand dollar. This is the interest rates not changing on the New Zealand dollar. Makes sense. Yeah, there's no bias, long or short. Therefore, it shouldn't be breaking out of ranges. Therefore, if we're at the top of the range, you should be shorting it only. So we'll see what happens with that one, but very difficult to trade at the moment. But again, if you wanted a bias on it, be short only would be probably the best way to do it. But that is what I was doing from down here, and I got stuck in that. So, but now we're up at range highs. It's more sensible. Makes more sensible. It's not even a word. Makes more sense to be driving it short. CAD dead sideways again. Just stuck. Everything is stuck. This is what 1, 2, 3, 4, 5, 6, 7 or 8 months now. Sideways. Really contracted. We're down to 28 ADR. 28 pips a day. This thing is moving now. It's ridiculous. It's just dead. So we're getting the odd move on news. Yeah, which you might get a couple of ADR out of, but it's really going nowhere. So you could kind of take any extension you like on this and you should be safe for the moment until we get some news on interest rates. But again, it's the Swiss franc. So you are open to worldwide events with safe haven runs. And you are also open to the Swiss completely changing their mind on interest rates and changing it at any time they fancy, in which case then this thing could take off. So it's a little bit risky to trade. These are the types of pairs at the moment, the Swissies and things, stop loss based strategies, or maybe having rules where you scale in 2 or 3 positions and then get out the whole thing. So split a trade down into 3 parts, that type of thing. Probably not a bad thing to be just range trading, but relative strength at the moment, it's got 28 ADR. There's nothing in it. There is no strength. So it's very hard to find any indication apart from support and resistance that you can really use to any effect on this sort of stuff at the minute, because it's just not moving. So we've covered the yens, euros. So all the euros basically, as Lagarde said yesterday, back here somewhere. There's a strong likelihood of a June ECB cut if the price path holds. There is no reason for the price path not to hold. So if we scroll forward to the ECB rate announcement, which is on the 6th of June, that is when they will be dropping the rates, unless there is any news that drives that euro in the wrong direction. So we've got the CPI flash estimates coming out at the end of this month. We've got the German CPI. I think that was where's the French? That's it. So we've got German CPI next week. So that really is your only factor that can change that interest rate. If that German CPI figure bounces dramatically, they may think twice. Other than that, in 2 weeks' time, the interest rates are dropping on the euro, which will mean bearish euro. So as you can see, the market is factoring that in already. So shorts only on euros, ideally. So any RSI hits, ADR hits to the upside, good looking short opportunities, support resistance bounces from highs. Just wait for reverse alerts, wait for those sellers to come in on board with you if you're using the MRA. Just take short opportunities as much as possible, basically. Euro CAD. So I've got one short on there from, again, last week. Look, took a short. Just not gone anywhere, not doing anything at the moment. So this propulsion gap's holding at the moment, intraday. Euro Swiss, same thing. Now the Euro Swiss is a very difficult one as well to trade because the Swissy moves a lot with the euro. The bias on the Swiss is obviously bearish. The euro is about to go bearish, therefore you're going to get a lot of that. So you're going to get safe haven runs with it. Apart from that, there's no real bias in either direction. So the question will be, when the euro switches short, which is going to be the stronger? We don't know. So it's very difficult, Euro Swiss, to trade. And again, you have this danger with the Swiss franc where it just either devalues itself and gets grind, or it powers up and constantly gets money pumped into it, and you get these big, strong, grindy moves, which is why it's tricky to trade the Swiss. But a lot of people don't like it. I've made lots of money out of it, but it's at the moment really unpredictable because of of interest rates changing. So again, one of them that's not on my radar at the moment, but I probably want to be more short than long on it. Euro pound. So I've got longs on at the minute. I want to be short. Unfortunately, before I got a chance to switch the EA over onto short only mode, I'd got in long. So I am in a position long on this. Next trade was taken this morning there. So I've just got on another position. My average is there. I kind of want to get out of this as soon as possible. So if I can bank some decent money on some other moves, I might start doing drawdown control to try and get out of this. And I want to flip short at some point. So if you look at it at the minute, as I said, was it yesterday or Monday? What would be ideal would be a push down into this monthly low and the previous low here, so that we can get another position on, which I've just got on this morning, and then hopefully just pull back on this before we get that rate announcement coming out on the euro, and then I can flip short on it. However, unfortunately today, the pound has missed its target, which has obviously rallied it. So we need that pound to weaken back again before the interest rate change. So yeah, I've just done some drawdown control on that one this morning. Another position gone on to get the average down, and want to get out of that one as soon as I can. Euro New Zealand. So again, big drop down. Shorts, really, you want on this one. Again, Yeah, no reason to be really long in it. It's always, we're not going to know until the interest rate drops start whether or not we're going to get nice, clean market structure moves in trends, or whether we're going to get these parabolic collapses, as we got parabolic run-ups when the interest rate rises were happening. So it's very difficult to know. I suspect there'll be a good chance of parabolic moves, because we're going to get interest rate changes happening very quickly on one instrument, and the other instrument can't do it because their inflation's too high. So you're going to get a huge bias in one direction, which means big, strong moves. So two problems with that. First is you don't get many pullbacks on them to get into shorts. Second, if you get in the wrong direction, very hard to get out if you don't get those pullbacks. So shorts, again, there, coming back down into the original New Zealand interest rate change back here. So we might get some buying up, or we have got some buying up coming out of this, but you've got this propulsion gap, which they may well add back into. So this is the main target short. But obviously if it takes 2 weeks to get there, you don't want to buy it off of that when the interest rate changes, because the likelihood is it's going to go through the floor. Euro US, again, bias on this one. I've got shorts on this at the moment, which I'm quite happy with. I'm almost tempted to turn the EA targeting off on this, because I don't want it to get me out 1% profit or anything. If this goes the way it should go, that euro is going to start to weaken. That US dollar is getting pushed back further and further and further, which means it becomes neutral to strong. You've got weak against a strong. You've got a massive downward bias. So this is a beautiful pullback, very, very deep pullback, and a lovely reaction at that resistance, where the market seems to be adding and accumulating more positions. So very good chance of a drop on this. Much rather be short than long, and I've got two shorts on at the moment. I'm just going to pop my VPS up. Remind me. I need to just change the bias on some of those. Pound odd. So pound at the moment, we've got an RSI extension just about to trigger for a short. We've got this propulsion gap, which we just filled, and it's obviously flown straight through that on the news. It's an ADR hit today as well. So there's a good chance of shorting this. If you drop down M5, reversal, that's going to be quarter of an ADR away. So one or two things is going to happen. We're either going to get an A-shaped recovery. It's nice M pattern reversal going in at the moment, look. So we're either going to get that A-shaped recovery where we come back and return to origin, or the market will use this to create a strong move, which they will add to. So this is obviously based on inflation missing the 2.1 target or forecast and getting a 2.3. The market needs to now decide what that means to the Bank of England, and if it means that the Bank of England are still going to reduce interest rates, because let's face it, it's a massive drop from 3.2 down to 2.3, still a 0.9% drop annually, which does mean interest rates can come down. It just means that because they didn't quite get to where they wanted, it may not come down as soon as we expect. So the market needs to decide whether or not it wants to run the pound for a couple of months, or it's enough and we expect the interest rate drop to happen fairly soon, which means that they will probably start to want to get out of the pound. We'll have to wait and see. So key news event this, it's either going to go propulsion and push back up into those highs. So if we do get RSI extensions and you short it, expect to be scaling in up to there. Pound CAD, same thing. I'm already short on this one. Obviously done, as you can see, 2 drawdown controls already today. Average is within ADR, so easy for me to get out. A-shaped recovery, I'm back to where I started. It's no problem at all. Got that propulsion move down there, and again, we're in the hands of the market as to whether or not they think this move is substantial enough for an interest rate drop or not. So we'll wait and see what they decide. Upside on this, we're out of the highs now. Yeah. So this is either going to be a false breakout, we're going to return and then start in here, or it's going to break out, retest, and go. But that will probably only be for sort of a few weeks. It's not that much of a miss, is it? Let's face it. Pound Swiss out to all-time highs. Again, Swissie's been massively weak. Pound's been running nicely, so that's already really extended. We're above the 80 level on the 4 hour now. We're approaching the 80 on the hourly as well. But as you can see, we've got very big bearish divergence in there. But we've had bearish divergence multiple times. This is why I don't trade divergence. It's got exactly the same strike rate as everything else. It's 50%. Yeah, divergence sometimes works, sometimes it doesn't. So kind of a pointless thing. But it is a good confluence to have. And it is very, very, very extended, this one. So again, if you look at it as to where we are in relation to that 24 moving average, we're 4 ADR away. Yeah, big, big, big extension away from that monthly moving average. So there's a good chance of a pullback. That's your target, that propulsion to the downside. So if it's going to be a breakout and continuation, that's potentially where they would add to if you want to short it. Pound New Zealand, can't tell what's going on with this. It's a news against a news, bullish news against bullish news. We're back to square one. I'm long, it's in profit. I'm going to bank on the pound being stronger than in New Zealand as it normally is, and this move basically continuing. So my targets at the moment on this one are up in this propulsion gap where they have been since I got into the trade. That was my initial position. Scaled in, scaled in, scaled in. I got out of some yesterday. Added again this morning, back in profit. I just, we've been stuck in a range for 2 weeks now. So it's payday, hopefully. This could well break out that weekly high, which it should do. Whether or not it can get out of the 2-week high and that propulsion move, we'll have to wait and see. So longs on that at the moment. Don't have a problem being long on the pound. Pound US, I'm short. Average is there, looking for a test of that propulsion, looking for a test of that propulsion. So that was my initial target for a retest. The news has obviously scuppered that one, but we've got US PMIs tomorrow. Could well be back down there. So this is potentially a strong currency against a strongish currency. So I thought I was going to sneeze. So this could go either way, as you can see. Yeah, so there's no real problem trading the pound US dollar in either direction. There's no fundamental bias on it at the moment, really at all. This is going to go first, interest rates. So in theory, longer term, it's a short, but right now it's not. It's anything you want it to be. It's just moving up and down quite nicely. But always get a lot of movement on the pound US dollar. It's the most liquid pair we have in Forex. So trade in either direction, really. So I'm short at the moment on it. However, short term, we could be putting a propulsion gap in there at the moment, which will hold and then they'll rally on it. So if we get any negative news on the US, this is going to continue. If we get any bullish news on the US, it's going to drop because the US is going to trump everything. It always does. New Zealand. Again, I've got shorts on the New Zealand dollar CAD at the moment. On my other account, I've also got a short on the New Zealand dollar Swiss, which I've just added to this morning. Still think there's a good chance of coming to retest this level down here. We've had this basically situation where we just get nothing, news, nothing, news, nothing. Now, this news is either going to be a false breakout and then they're going to test the other direction, or it's going to be the same. Yeah, we don't know. So we'll wait and see what happens with it. But the market has reacted positively to the interest rate not changing. They've done a positive, a negative, and a positive. They just can't make up their mind with this thing. So I'm short at the moment. Average is not far away at all. So where we are price-wise at the moment, my average is 35 pips away, which is less than an ADR. So I'm just looking for I'm just literally looking for a down day. You can just give us a decent down day. I'm out. Yeah, just give us a down day, maybe a couple of down days. That's all I want. Yeah, we're up at a beautiful monthly at the moment, which rejected. They've tried to break through again. If this breakout fails, there's your M pattern reversal. So it's a stop run M. Short. Still looks good to me for shorts, but if the market decides to rally behind this New Zealand, then nothing we can do. New Zealand Swiss, again, I'm not trading the Swissy at the moment. I've still got a tail end trade from way back here running on another account, which is short. My target at the moment is that propulsion gap to the downside. My average is about here. So again, it's the same thing. I just want to down the New Zealand. This is the worst news I could have expected today, but nothing you can do about news. Yeah, we're holding at the moment on this one. Swiss franc is weak, we know. Hence, we've had all the moves on the New Zealand dollar have been bullish against the Swiss, but you tend to just sit there for ages doing nothing. So it's a short right now because we're extended on RSI. If you look at the 4 hour, again, we're a long, long way from that 24. When you get far away, you tend to get retracements. So it is very, very stretched. Again, got bearish divergence on the 4 hour. Yeah, it's all pointing to a retracement of some description, but potentially a continuation long term. New Zealand dollar, US dollar, again, shorts on this one. That's retraced very nicely. US dollar's powered up. So had to do a drawdown control on that one this morning. Didn't manage to get out of that range. Just, again, a little bit of downward movement gets me out in profit. So just waiting on all of this at the moment, but nicely extended on the 4 hour. Yeah. So see that trade there. So that's where I got in on that just about. Actually, it was hourly RSI extension I get in on, not 4. So entry was there. After getting out of that one, we just sat around. News event, sat around. We've had a news event, but that's failed. So that's a breakout failure, basically. So we would look for them for price discovery back down to the downside to test that area there, which is where my target is. So looking for them to break this low. Positive US news. It'd be nice if FOMC rallies this evening, but we'll see what happens. And the US dollar. So US at the minute, absolute mess. As you can see on this chart, the US dollar CAD specifically is an absolute dream at the moment. Short, long, short, long, long, out yesterday. Any RSI extension it gives you, just take it. It's absolutely beautiful at the minute, our US dollar CAD. There is no bias. There will be no bias, really, because these two guys will tend to move together all the time that this has got no interest rate change. This is unlikely to have an interest rate change. The only reason this changes direction is oil. And they both are big oil export countries, so they both tend to move a lot on oil as well. So you can literally get into anything on this you like, really, and you should be pretty safe unless a fundamental shift happens. The Canadian interest rate drops or the inflation number drops dramatically, causing a spike, a la the interest rate inflation figure coming out completely unexpectedly on the US. Yeah, but it will always undo it because they're trade partners and they need to keep their price nice and tight. Otherwise, it's not economical to trade with each other. So either direction, US dollar Swiss, this is probably the most dangerous pair to trade at the moment, I would say, apart from yens, because you get some big old squeezes on this. Yeah. When you get a safe haven run followed by a piece of either positive or negative news in the other direction on the US, this thing goes for weeks. So it's always been a very dangerous pair. I've been caught in a number of dodgy squeezes on this. It's, at the moment, specifically because of this thing, it's got the potential to suddenly start to fly. All you need is a couple of bad news events from the US, or rather good news events, i.e. their inflation dropping 2 months in a row, for example, and the Fed coming out and saying we're pulling interest rates forward. Yeah, that collapses as the Swiss come out and do not change their interest rates because their inflation drops. All of a sudden, this thing's going to go ballistic. But which direction and when? Down to the fundamentals, and we don't know what's going to happen with those at all. So dodgy one to trade. And we've looked at the US dollar yen, which this yen is a complete mystery at the moment as to whether or not that is actually going to have any impact, and what they're going to do with interest rates. So the next news we've got coming up from Japan, we got Oeda speaking next Monday, and then they got CPI on the Friday. The rate is the 14th of June, so we're 3 weeks away from the next monetary policy release from the Bank of Japan. We know they are now on a increasing interest rate regime, which they haven't been on for 2 decades. What impact that's going to have on the yen, we'll have to wait and see. But for now, the intervention has failed. Interest rate increases, we don't know if it's going to have any impact at all. So, yeah, I keep doing this because that's exactly what I'm expecting to happen after this, but not, is it? I just can't get, this is why I'm not trading at the moment. I cannot get my negative bias out of my head. So I'm not going to do it because that costs money every day to trade with swaps. And all the time it does that, all you're doing every day is hemorrhaging cash. Like I said, that US dollar yen trade that I had on, that I took off here somewhere, 20% of the loss was swap. So I can't bring myself to long it because of the intervention and the positive interest rates. And I can't bring myself to short it because it costs too much. Just not going to trade it. So we'll see. See what happens with that one. So that's about it. Morning champagne. Harold, what about running ORB during Forex news? You can try it. Spreads will kill you. Slippage will kill you. News trading doesn't work, Harold. No one on the planet makes news trading work. Not that I've found anyway. It's not consistent. So look at this morning. Yeah, so if you use the ORB when that news came out there, I don't know what the spread was there, right? But if you use the ORB here, for example, and you took a break of that range, yeah, at that particular point in time, the spread was probably like that. Yeah, so you would trigger long, you would trigger short. You would stop out long, you would stop out short. Price would move down to there, you make absolutely nothing. Yeah. So straddle trading news, they're not stupid brokers, yeah? You've seen this, we've watched news in here, yeah? And I say, don't I, literally 5 seconds, 10 seconds before the news, there goes the spreads, guys. Yeah, spread was that, now the spread is that. It's purposely designed to take out anybody that is trying to straddle trade it because you can't. And then what happens is, you will get spread so fast, you won't even see the spread happen and the move will happen. And then what will happen is if you say went short only and you ask for a pending order there, your order will get filled there, yeah? And by the time the price has moved down to there, it will retrace. Now, your stop loss that you had there on that trade, which was worth $200, you've now got a $600 stop. They'll retrace it back up or spread you out to take that $600, which you wanted to be $100, and then the price will go in your direction. Then you get crossed. So you add a double size trade in just as the reversal happens. Yeah, that's what happens in news trading in the real world. Don't care what anybody teaches you. Try it. That's what happens. So you can try the ORB, but I can assure you it won't work. I've tried. Other people have tried, I know, and they haven't managed to make it work. Fixed spread, you can use a fixed spread if you want to, but if you use a fixed spread broker, you can't use EAs. There is no fixed spread broker on the planet that I'm aware of that allows you to trade MetaTrader 4 or 5 or use EAs because they use fixed spreads. Yeah, variable spread brokers are there to spread the market. That's how they make their money. As a brokerage, your main primary source of income is spread. Yeah. Fixed spread brokers make money on commission. They don't care about spread. Every time you press the button, they make money by a commission. Yeah. So if you're going to do that, they're not going to allow you to trade algorithmically and try and take advantage of things like that because they can't. A fixed spread broker won't be able to get your order farmed out to dark pools fast enough because they don't take the other side of your trade usually. That's not their purpose. Yeah. So a fixed spread broker, there is only one fixed spread broker that I'm aware of in the UK. And you can use MT4 and MT5, but they give you variable spreads on terminals. If you want to use fixed spreads, you have to trade on their web platform because they're not stupid. So you could manually do it, but again, you will not be able to change things fast enough, and you still won't get spread. You still won't get filled, yeah? So even if they offer you a fixed spread, you ask for a price there, you will get slipped. You'll never get filled at the price you ask for because the banks and institutions are ahead of you in the queues. So by the time you get to your order is not where you wanted it. Yeah. You get any, there's loads of EAs out there that trade news, right? Go and stick them in the back tester. Profit curves are amazing. Go and trade the real news with it. Profit curves through the floor. Because it doesn't take into account variable spread, which is the primary thing that happens around news events. And the open, yeah. Open on indices. DAX out, clean break profit this morning on the DAX. Nice, clean, easy one. Hedged on the FTSE, as I suspected, because we've already had the move on the FTSE. So yeah, it's just not going to happen, unfortunately. What about a pre-hedge entry prior to the news? Yeah, you can do that. Yeah. But think about it, Harold, right? So let's say, for example, that's the news. So let's say you decide to get your hedge there, right? That would have triggered before the news, which is fine. But at that point, the market spreads. Your stop loss is there. So what happens? The nice short order you had on, as the news comes out, gets stopped out, and the market goes your direction without you because you're stopped out because the spreads are widened. So, okay, let's take a wider spread. Let's spread the entire Asian range before the news. Fine. If they haven't spread that far, probably did, but if they haven't, that will work. How many times that will work? Don't know. And what is your risk reward on it? So if you're going to put a stop wide enough that they don't spread you out on it, realistically, on a 175 ADR move, which this was, which is a big news event, you're going to get a 3-to-1. So as long as 1 out of 3 news events works, you break even. Most news events are not going to spread you, not going to move you down to 175% of ADR. Just not, math doesn't work. Just doesn't work. But go and try it, but try it on a demo. Don't try it on a real account. And you'll see the pitfalls in it. Looks great on paper. This is the trouble with everything in trading. Everything looks great on paper. When you're in the real world, it's just not the same, is it? Best analysis ever, and only 5 viewers. What? Where is everybody? Wow. Where's everybody gone? Did the stream drop out or something? Oh, I'm talking to 5 people. Hello, everybody. 6. I think the stream must have dropped out or something. Or YouTube's dropped out. It's not me. I've got no dropped frames. My stream quality is good. Don't know where everyone's gone. That's weird. Do you size your positions differently depending on the pair you're trading? Yep. So the EA calculates all that automatically. So the EA does all the lot sizing based on your risk. And your account size, yeah. So in the EA, you just basically calculate, you say, I want to risk 0.5% of my account over 1 ADR. So depending on the ADR of that instrument and your risk, it will auto calculate the lot size. So you don't need to worry about calculating that. If you do want to, if you don't want to do it with an EA, then you need to get a maths thing. Morning, Grateful Buster. Paul, still here? Think that's an error? Yeah, that must be an error. Fire Christ, Kennelly here, Jeremy, Monkey. Yeah, I don't know. It says 6, doesn't it? It's not just the stream counter either. That's fed from this, and that it says 6 people watching. You can't see it's behind my head, but it says 6 people watching. There's more than 6 people in the chat, so it's definitely not that, is it? Something's broke. I've broken YouTube. It was 8 for a while, was it? Oh well. I think YouTube's just got hacked. They've got them. They finally got them. They made the money using your EAs and are outspending it. Yeah. It's an error, yeah. Okay, everybody's here. Okay, everybody's here. We know you're here. I'm not going to take a register again. I did that at the beginning. I didn't get dropped. My YouTube chat says only 6 as well, yeah. I've seen that before. That's the first time I've seen that. Interesting. Obviously some glitch. So today basically it's going to be about waiting for that FOMC. So with all of these news events that we're getting at the moment, either the market seems to just go sideways after the news, or it decides it is something it wants to do and we get a move started. But it is totally random at the moment what the market decides to do. So I think it's a case of today just waiting and seeing whether or not we get a continuation on the pound or we get a continuation on the New Zealand. So the New Zealand at the moment has stalled and it is holding. So it doesn't mean it's not just going to grind back down and put that A-shaped recovery in over today. So it's a case of waiting and seeing. I wouldn't be surprised to see the market just stall out for the rest of the day until we get to FOMC, because it is the US dollar that everybody's interested in, because that is the vast majority of the Forex market is driven by the world's main currency, which is the US. So any news that we have, which is fundamentally potentially going to shift the direction of the US dollar, the market sits and waits until it has that news before it puts the big moves in. So, yes, we want to be bullish there. I mean, that means nothing, but the market seems to want to be bullish there. But what we'll probably find is it will wait to see whether or not it can be bullish after that. And obviously make the move at a later stage, probably tomorrow. So it'll use this to drive those moves tomorrow. So we got news starting at 8:15, 8:30, 9, 9:30, and then on to 2:45 tomorrow afternoon. So all the PMI figures are coming out. So that's your, sorry, I'm going to sneeze again. Your next market moving event. So it's the Purchasing Managers Index. So it's basically the people that buy the raw materials for everything that we buy, and everything that we buy is basically to do with inflation. So this is the leading indicator for inflation, which is the leading indicator for interest rates. So very important figures tomorrow. But so far today, all a kind of reaction, no reaction. So we'll see where we go, but hopefully we get a continuation on this. Be nice to get something actually having a directional bias for a change, but we'll wait and see what happens. So keep your eyes peeled on Financial Juice today as well. Just to see if anything comes in from any of the talking heads off the back of what we've had this morning. But other than that, just sitting around and waiting. So I've done some DD control this morning, 2.6%. Had to scale out of some of these moves because they're obviously against me. I'm doing, after the first quarter this year where I held on to some positions a little bit too long, I'm doing regular DD control now at 2%. So I will be taking continuous losses as we go. But obviously, 1 or 2 down days, this lot all turns into 8-10% profit. So it's just a case of waiting to see if we get these pullbacks in. Pound New Zealand's doing very, very nicely. So good chance of getting that one in the bank today. But other than that, no new positions really to take. Because I'm in half this stuff. Greg Secker robbed my viewers. He wishes. I haven't heard from Greg for a while. I've not seen him in my adverts. Mind you, I have got a advertising blocker running, so I don't see a lot of him anymore. He did pop up on my Facebook the other day. First time in a while. Had some new makeup done by the looks of things. Good. Nirav popped up as well. He's got some new course out on fundamentals. So all of his technical analysis and useless retail charts that he's been teaching us, he's now trading fundamentals instead. Anyway, another course to buy for $900 or $1,000 or $2,000 or however many dollars it may be, but I can pretty much assure you that he'll be using the same information as I do, and it's all on my website, absolutely free. Anyway, right, I'll be back tomorrow afternoon because we have US PMI numbers. So I was going to do a couple of streams tomorrow because we've got the PMI numbers for Europe coming out, but because they're so spread out, we start at 8:15 with France and we finish at 9:30 with the pound. So it's a good hour and a half before we've got everything in. And then really that's the one we're focusing on, which is tomorrow afternoon. So I thought I'll trade tomorrow afternoon. I'll trade the open and we'll watch that. But I'll do an analysis of everything that's happened there. So I'm going to come on at 2:30 tomorrow. We'll do 15 minutes worth of having a look at what's happened with Europe this morning or tomorrow morning. And then we'll see what happens with this one. But that's your last main news event for the week. We've got retail sales for the pound on Friday, but other than that, and Michigan, which probably won't do a lot. But so that's our last big news event of the week. And it's been pretty turbulent this week. But if you look at actually where we've gone, nothing's really gone anywhere, is it? So, still not going anywhere. Until those interest rates change, we're stuck. Quick request. Can you give a nutshell guide to what a parabolic SAR is? Parabolic SAR is parabolic support and resistance. So it's basically calculated. Where is it? So it's calculated. Based on movement. So all it is a support and resistance based on price. Yeah. So it's dots basically. As the market accelerates down, parabolic, fast movement, these dots move quite slowly. Yeah. As the market goes into more of a contraction, you see that dot there and that dot there and that dot there. Yeah. The distance between the dots catches up with price quicker. So the idea behind it being is it's like a moving average, but it's a moving average based on parabolic price movement. So the calculation of it is different to a normal moving average. If you look at the 9 on the 5, yeah, that's a 9-period moving average. Leave that. That doesn't make a lot of difference. Or is it the step you change? Might be the step you change. Can't remember. Yeah, it's the step. So that's a 9-period parabolic SAR. That's a 9-period moving average. You see, the moving average is weighted to price. Yeah, so the average price is there. Between there and there is there. But this takes into account movement, which is why people use this for a trailing stop loss a lot of the time, because it's more dynamic. Yeah, so as price is pushing hard, the chances of a reversal are stronger. Therefore, you want to be getting out quicker. The average will be down here. The parabolic SAR will be up here. So you can see exits are quite often better with a parabolic SAR. But again, it's one of those, every indicator that you can change dramatically the visualization of it. Yeah, and how it displays on your chart by changing parameters means that you can curve fit it. So who came up with the default? Is the default best for this market? This may have been a default produced for the stock market in the 1930s. Therefore, is this the best thing to do on Forex pairs today? And is it the best thing for a 5-minute time frame, or does it work better on that? So let's change it and make it a 0.06 here, because that seems to work better on the hourly chart on this instrument. But then you scale out and you go back and go, actually, no, it shouldn't be this one. It should be the 0.09. It's all curve fittable. But at the end of the day, all it is, the main use of it is for trailing stops. Yeah. So when price pushes below the parabolic SAR, it flips the other side. Some people use this as an entry criteria as well. Yeah. But you'll find, like everything, it always lags price. And like all moving average based indicators or average based indicators, when you're going to a range, yeah, it says short, long, short, long, short, long. You can't use it as a signal indicator, because all it does is it tells you to go the opposite direction every 5 minutes. Useless. But for trailing stops in trends, it is useful. It's more useful, I think, than a moving average. But you can always find a moving average that will match it fairly closely. So if you go with a 20, no, actually, you want to go with a faster one, sorry, a 5. Yeah. So that is the exit for the parabolic SAR. That is also the exit for the 5 moving average. Yeah, that is the exit for the parabolic SAR. That is also the exit for the 5 moving average. Yeah, entrance for the 5 moving average, entrance for the parabolic SAR, exit for the 5 moving average, exit for the parabolic SAR. Yeah, all indicators, you can change the settings on another indicator to give you exactly the same result. Which is why all indicators are useless in a certain respect, because they all mimic something else. Every oscillator you can fine tune to match any other oscillator. So why not just use one oscillator? Yeah, I can make an RSI look the same as a TDI, look the same as a MACD signal line, look the same as a stochastic line. All I've got to do is open up that other indicator and change the settings so that they closely match each other. What's the point in that? And which one's right? Which one's wrong? There's nothing better than anything else, is there? They're all just different. But that's the only use I ever found for a parabolic SAR was for trailing stops. And intraday, it's very good. So if you were to trade something like a 15-minute, I mean, just need to try and find something that's trending. There you go. So there's your exit. So basically, let's say you shorted a break here. Yeah, so forget about it. Forget signals. Never use it as a signal indicator. But let's say you take a break here and you had a stop loss somewhere, wherever. Yeah. As your trade starts to work, i.e. when your trade goes into profit, yeah, this parabolic SAR will show you that the trade is still going in your direction. When price crosses back above it, the dot flips. That's your exit. So you get that much of the trade, but it's telling you the market is pulling back. And what you'll often find is it will then push up above, flip the parabolic SAR the other way, and then the next leg starts. So as with all trailing stops, you get stopped out. Yeah, if this move continued for 3 days, the parabolic SAR gets you out of a 3-day move. But you've got to get out somehow. I've tested virtually every exit strategy there is known to man. So end of day exits, trailing stops on moving average, trailing stops on average daily range, trailing stops on ATR, trailing stops on parabolic SAR, trailing, not trailing stops, but risk reward based exits, exits based on candle size. I've tested everything. They all give you an exit. That's the only thing they have in common. Which one is the best to use will depend on what price does for the next 2 days after you get out of your trade, or the next 2 candles after you get out of your trade, because you're never going to catch that. Your job is to catch the meat. Yeah, you're not going to catch the top. You're not going to catch the bottom. If you can get some of the middle, great. How much of the middle you get depends on which indicator you use as an exit strategy. If you use a TP at a previous support, and it gets you out there and it bounces and then collapses through it for 2 ADR, that was wrong. If it flies up, that was right. Which is the best one to use? Don't know, because from that point on, you can't see any of this. So your job is to basically close your positions and take some money. How you take that money, pick an indicator. They all do the same thing. They tell you X. And X is either get in or get out. All indicators do. They signal either a condition in the market has been achieved, or that flipping from there to there, in this case, a signal to enter. So the market has been doing this, and we think you should do that. Whether you, that dot that I've put on the chart based on an input I've put in that is completely random based on something that's going to happen randomly after I press the button, it helped, does it? Which is why it's so difficult to build a strategy, because it doesn't matter what indicator you go. I went round in circles with indicators for a decade, literally a decade. No one can throw an indicator at me that I have not used. I've used everything. I've studied everything. I've built analysis on everything. I've built EAs to backtest everything. And every indicator, I've used different exit and entry indicators with it to try and combine it into a system. The conclusion I have is that sometimes they work, but sometimes they don't. The only thing you have at your disposal is risk. Yeah, because if something's moving up and down at random and an indicator works at random, the only thing you can control is how much money you lose and how much money you win. Those are the only 2 things you have, because you can't make this move up and down. You can't make that one be the right one this time. And you can't make that be the right exit this time. That support that worked 3 times in the past doesn't work this time. None of it works, but it all works. This is the problem with trading. You find something, you grab it because you see some kind of success with it, and then it fails and you throw it away and you try something else. Do you know how many indicators there are out there? You could go your entire life and test every indicator and still have 100 left. Not one of them is going to help you make money, though. They will all help you enter and exit, but whether you make money or not is down to what the market does and when you enter and exit, and that is got to be something that a human being's in charge of. You can build a mechanical system, but a mechanical system will fail at some point. And when it starts to fail, all that you will do is lose money, dump it, and move on to something else. When you get a system or a strategy that allows the market to move up and down on its own accord and do what it needs to do, at some points it will bring you in and out of profit. If you can find a strategy that does that enough and has an edge long enough to make money, that's it. That's what you do, isn't it? That's the only thing you can do. But every time you use a parabolic SAR, for example, and it flips and says get out, and you take that much money before it does that, you will get cross and you will change your parabolic SAR so that that dot that appeared there that told you to get out now appears here and tells you to get out there. But by changing that, all you've done is you've curve fit the indicator to suit that trade. And all of that curve fitting is based on what's happened in the past. Not going to happen again. Hard, isn't it? It's a hard job predicting random future movement. We almost need to be psychic. Unfortunately, we're not. What we need are precogs. Yeah, I was watching Minority Report the other day. We need precogs. We had precogs and we could see future charts. Problem solved. But then they would send a load of guys after us to put us into prison for predicting future price movement and benefiting from it financially, wouldn't they? So it's not going to work either. There we go. I'll invent the precog indicator. You can all have it for free. It basically flips a coin on Google and tells you to go long or short. 5 viewers. It's not 5 viewers. It's stuck. AZ. You've probably come in after we've been discussing it, but the counter is broken today. There's more than 5 people in here, but the counters, my counter says 6 now. There's not. 1, 2, 3, 4. I don't know. Maybe there is. Precogs drive blue Porsches. Yeah. Yes. I stopped following him a long time ago. I have no idea what he's doing now, but I'm pretty sure he's probably come up with another course since I stopped following him. And he's probably bought another blue Porsche. Anyway, we won't talk about blue Porsches. Mine's silver. It was. I haven't got one anymore. But anyway, right, I'll be back tomorrow, same time as usual. No, I won't. Well, I'll be back tomorrow for Market Open. I think he got smashed on New Zealand dollar Swiss just today. He always does, though, doesn't he? This is the cycle, isn't it? That's the cycle of the people that run the trading groups. The trading groups, it's like a P&L. When you're having a successful, lucky run, your trading group, people talk about it. And then when it all goes wrong, you keep quiet, don't tell anyone, and then you build it up again. Yeah. And these people's P&Ls are made up by subscriber numbers rather than trading profits. But it's the same principle. It works, doesn't it? You've got to learn from somebody. I don't have a problem with trading groups, and I don't have a problem with people selling courses if it's something that is useful. The trouble is 99.99% of courses and trading groups are recycling the same old crap that doesn't work. Yeah, they just call it something different, and because you haven't heard of it before, you buy it. That's it. That's what they do, isn't it? That's all that happens. I've got a video on the website about it, haven't I? Why you've got to stop buying trading courses, because you're just buying the same thing over and over again. Like the stuff that Nirav's doing at the moment, the fundamentals stuff. It's nothing you can't find out on the internet. Yeah. He's basically talking about how interest rates and inflation drive markets. We know that. Go and ask GPT, whatever it is. GPT? What's it called? Chat GPT. Go and ask them. They know. Same information. Jeremy's still here, don't worry. Yeah, good. That's good. Well, at least I know there's 2 of you here. 3, 4. So there's 5 now. Look, somebody's gone. Right, I'll be back tomorrow, 2:30 for the 2:45 news for the PMI numbers. We'll have a look at the European PMIs and just got to play it by ear today, because obviously we don't know what's going to happen with these moves. They're either going to completely undo themselves or they're going to accumulate and then run. So we'll wait and see what happens today. We'll look at it again tomorrow. Looks to me like it's all starting to unravel, though, doesn't it? All right, so have a good day. Anything you need, I'll be in Telegram or Discord. Other than that, I will see you guys tomorrow. Have a good day.